right, good morning, good morning, good morning, everybody. Happy Tuesday. This is the morning show. Spencer, I got JC. No Steve today. Steve will be back tomorrow. Steve doing some research for us. So compiling some reports, doing very important paperwork is what Steve is doing today. He'll be back tomorrow. We got Alfonso here. We got Kenny Glick in the house. We got Dr. Phil Perlman on the show today. By the way, it's been a couple days since we've had a guest on the show. If there is someone that you want us to get on the show, someone that you like, that you follow, that we haven't had on before, please let us know. Email us at questions@stockmarketmedia.com. I love hearing who you want to see and talk to, or us to talk to. I will gladly reach out and do my best to get people on the show if there is a demand for it. So that's my PSA for the morning. We got a chat. We do have a chat. We have a JC. We have charts. Yes. Capiche? Great. Everyone, let's do this.
All right, Mr. Spencer Israel here. Big fan of the Savannah bananas.
I love me some bananas. Yeah, that's right.
Love
You say Savannah, banana. I say banana.
And so you went to see the Savannah bananas recently, and it was the hype was real.
It was a great time. Deserved. It was a great time. Super affordable. Like this shirt was like $20. I'm not even joking.
And the tickets were cheap. It's not like going to a regular Yankees game.
No, tickets were like $60 at the high end.
Wow.
Yeah. Craziness.
That actually is pretty cool because, like if you want to take your family to a Yankees game and it costs like $1 zillion, you can take it to a Savannah Bananas game. They're probably going to have more fun if they're little. And
they're going to have way more fun.
Situation.
They're going to have way more fun. Yeah. It was awesome.
Cool.
All right. Cool. What's going on this morning?
Quiet. Not a lot happening this morning. Eerily quiet. Some might even call that a dull market. A dull market is would be the proper nomenclature. And I don't know, Spencer, I'm new around here. Are you supposed to short dull markets? Are you not supposed to short dull markets? What is it that they say?
Well, okay, so yeah, you probably shouldn't short a dull market, but who's to say the market is dull? I mean, it's quiet overnight. Is what
I'm saying the market is dull. Oh. Do you think that I earned enough credibility at this point to be able to make the determination of whether or not a market can be described as dull or not? You think that I have a?
I mean, there are things happening. I'm looking at China this morning.
If we're at an Italian restaurant and you tell me, JC, pick a bottle of wine, do you trust that I'm going to pick a good one, or do you think I'm going to pick a bad one?
Yeah, I have faith.
So if I call a market dull, do you think that the market is the opposite of that, or do you think that my conclusion here is somewhat close to reality in the same way that you can make a good bet that I'm gonna pick a good bottle of Italian wine there?
I just don't think it might be like a little dull. I don't think it's all that dull. There's still every day there's exciting headlines. Not that you care. Like I said, I'm watching
pretty dull, Spencer.
I'm watching China this morning. We got stocks in the news left, right, and center. So I don't know. I just don't think it's all that dull.
Listen, we're incredibly fortunate here.
Christopher's got the solution.
Here at the morning show. We got smart chat here. Not every morning show has a chat as smart as ours. So shout out to all the fellas, to all the ladies. Get your hands up. Do you guys think that this market right now is rather dull?
I think it's a bit of an oxymoron to say the market is dull and also at all-time highs.
That second part, I don't know about that second part, but that first part that you said, an oxymoron about the stock market being dull, that I'll give you, right? So everything's relative. Like we know by design, the stock market is not dull. We're speaking relative to perhaps less dull moments, right? Particularly in September. The portfolio killer is what they call the month of September. The portfolio killer. Could they be more dramatic?
Yeah, I haven't heard about
portfolio killer.
I haven't heard about September seasonality in like 3 weeks. It's been
amazing how that happened, Spencer. Amazing.
Saw a lot of headlines about it first week of the month, and then not a lot since then.
Here's what these no talent ass clowns are not telling you. What movie? Anybody? Chat?
No, sorry.
Nothing?
No.
No talent ass clowns? Nothing? Come on, guys. Nobody?
Give it. We're on like a little bit, like a 10-second delay.
All right. So these no talent ass clowns, what they're telling you about their seasonality charts is that when September begins the month, stock market goes into September, summer's over, Labor Day, the whole thing. We get back to work. When we start September with the S&P 500 above the 200-day moving average, in other words, in an uptrend, historically, September goes up on average, you see. That's the part they don't tell you, right? Because that's not sexy, right? Nothing?
Nothing.
Office Space.
Oh.
Office Space.
Damn, that's a good one.
That is a good one.
I should have had that.
There he is. Robert nailed it. He got it in time. Shout out, Robert. There we go. Dr. B in there. Come on.
All right, my bad. All right, let's talk about what's happening overnight and why JC thinks the market is dull. Cool? Capiche?
Please. Michael Bolton?
Yeah.
Michael Bolton?
It's a great movie.
That no talent ass clown? It's a great movie. Great movie. All right, guys. This is a dull market. I don't give a shit what you guys think. I'm here to tell it like it is. And the Dow's not doing anything this morning. It's up 44 points, 46,766, pushing 47,000. How about that? Feels like just yesterday, Spencer. Just yesterday. It was Dow 25,000. Here we are at twice that.
Yeah.
Look at this. Hold on.
No.
What is this? NY Seinstein. I don't even know what that is.
Oh, Jesus.
That's how long ago that was. And I don't even know who the sponsor of that hat was. So the Dow's doing nothing this morning, down up 40 points. NASDAQ flat, 0.0, down 8 points. S&P 500 futures flat as well, 67.50 for the S&P. Wow. 30-year bond futures doing nothing. Why is the 30-year bond future market doing nothing, Spencer? Because this is a dull market, you see. And so we're at 116 and change for 30-year bond futures. You got crude oil up 1.3% at 63. You got copper flat. Why is copper flat this morning? Because it is incredibly dull. Copper flat, 463. Gold up 1%, 38.15. Silver up almost a 4%, 44.60 with the VIX. Still above 60, right? Pretty much right at 16. Pricing in a 1-point move. Not as dull as one would imagine for such a dull market, having the VIX up as high as 16. In funny money land, we got Bitcoin at 113,000. Up a couple hundred points this morning. Ethereum just under 4,200, flat. You got the old Solana just under 220, also flat this morning. Incredibly dull in crypto as well. Not just in TradFi, crypto as well. Very dull. That brings the total crypto market cap, Mr. Spencer Israel, 3.85.
I just don't know how dull things can be. I mean, gold is at all-time highs. Is that dull?
Yo, gold is the most boring shit of all time. Like literally by definition, like if you go all time to the most boring investment in the world, not that it hasn't gone up or anything like that, but literally, if you go around and ask people, what's the most boring investment in the world? They're going to say gold. So here you are proving my point that the one thing going up is the most dull.
Yeah. All right.
Oh, nothing sharp about gold. Very dull.
You got me there.
Very dull. Spencer Israel, my understanding from you GDP people is that 70% of it comes from the consumer. Mackie says that no country in the world has a group of consumers like America that spends as well as we do. How about that?
Yeah, that's definitely true.
Shout out to Americans spending a lot of money. First, I'm guilty of it as well. Well, more so my wife, not so much me. But we're all guilty of it. I'm buying random shit,
Yeah.
Right? I mean, what's wrong with that? Throw up that consumer discretionary chart. This one to me helps answer the question but JC, this is a bull market and there's so many positive signs and we want to buy stocks and blah, blah, blah. Great. We're doing that. But what is it going to take to perhaps have a more defensive posture? Perhaps maybe want to buy other things that are not very aggressive growth stocks and China and tech and financials and industrials. Like what is the market going to have to do to maybe, pull back a little, right? Take a little off the gas, as they say, right? Raise some cash, feed some ducks, buy some puts, like those sorts of behaviors. We're not doing any of that stuff, right? Nothing. None of those things. We're not buying puts. We are not we're not raising cash. We are not putting money to work. We're not shorting stocks. We're not doing any of those things, right? We are buying stocks. We're buying more stocks. We're taking profits. We're taking that money. We're buying more stocks. Like that's what we've been doing. And that has been working great. What a strategy. Own stocks in a bull market. What a fucking strategy. I mean, that is brilliant, Spencer Israel. Are you listening out there? That is brilliant. Can you imagine the audacity of us to go out there in the middle of a bull market and buy stocks? Can you believe it? What were we thinking?
What would it take? It would probably take some staples, some love for the staples, which are the second worst sector this year.
I love you, Spencer. You're so right.
Yeah.
I really do. I break your balls, but you're so right. I love
by
you.
the way, I'm not even looking at the deck. I don't even know if that's the next chart you have.
You're so good. You're so good. You see this is what I'm talking about. You pay attention here, folks. This is the guy. See, he knows. He knows where my heart is. Look at consumer discretionary. All-time high. Go back real quick. Right, stealing my thunder. Right? New all-time highs in consumer discretionary. That's not bearish. You know what would be bearish? If that fails. That would be, I don't know how bearish it would be, but it would definitely be a lot less bullish, maybe slightly bearish. So here you go. That's a big one. So now go to the next one. And now to Spencer's point, you're looking at the ratio between consumer discretionary and consumer staples closing at the highest levels of all time yesterday. Ever. Like going back all the way to the dinosaurs. Never has the consumer discretionary index been at a higher level relative to consumer staples. Now, maybe those of you might be wondering, what does this mean? Right? What does this mean? You got discretionary stocks where we spend our discretionary income. Home construction, automobiles, retailers, right? This is where we spend our money, right? Amazon, every day is at my house, right? Then you have your consumer staples. You got your toilet paper and your cigarettes and your booze and your potato chips, right? Those are your staples. You're going to be buying those things no matter how bad the economy is. So what ends up happening is you got $20 to $30 trillion in mutual fund assets that are long only, that when the market is doing well, the way they outperform, the way they generate alpha is to buy those discretionaries. Overweight those stocks, underweight the staples. But when the market is falling and they're positioned accordingly, they are overweighting those consumer staples and underweighting the discretionary because they don't need to make money in the market. They just need to do better than the S&P 500. See, that's the difference. So if the S&P falls 20% and their portfolio falls 10, they do a great job. They get a big fat bonus. That's how that works. So that's a lot of money. That's way more than hedge funds or ETFs, 3 times the value of ETFs. Mutual funds, whether you like it or not, whether you think they're stupid or not, I do personally, but that's doesn't matter what I think. That is what's moving the market. So this is telling you what those mutual fund managers are doing, and what they're doing is that they're betting on much higher prices for the stock market. And so if you're wondering whether this tends to be a leading indicator or a lagging indicator or perhaps a coincident indicator, I am here to tell you that oftentimes, more often than not, it is going to be a leading indicator. You're going to see whatever this is doing, the S&P 500 is going to follow. So if the S&P 500 is making new highs and this ratio is putting in lower highs, that would be evidence of deterioration and defensive sector rotation underneath the surface, which would be diverging from what the index is suggesting. To be clear, that is not what's happening. What is happening is that we're seeing the highest levels ever for this ratio, and that is not indicative of lower S&P 500 prices. Quite the opposite, higher. And so some people are like, well, JC, 25% of this index is Amazon. That's too much. Yeah, maybe it's too much. It's probably not enough, to be honest, right? I mean, if you want to really if you really want to weight this right, Amazon's probably should be more than 25%. But again, I don't get a vote. It is what it is. You got a lot of Amazon. You got a lot of Tesla also in the consumer discretionary. And then the staples aren't innocent either.
I was going to say, we're talking about staples here. 20% Walmart and Costco, which you could argue aren't even staples, right?
And then you got Procter & Gamble. You got other stuff as well, right? But it's the asset allocation to these groups at the sector level, at the institutional level that matters, right? Not like the fun arguments that we have around here about whether this stock should be in this basket and that stock should be in that basket. Like we talk about that like for fun, but the truth of the matter is this is an asset allocation story. And you see it like in the small caps. Notice how the Russell 2000 and the S&P 600 look exactly the same, even though one of them needs good fundamentals and the other one has the worst fundamentals. Doesn't matter. It's an asset allocation story. So if you want to equally weight discretionaries and staples, now you're eliminating the Amazon effect. You're eliminating the Tesla effect, the Costco, the Walmart, the Procter & Gamble effect on the consumer staples. You're eliminating that altogether, and you're treating each company in the sector the same, regardless of how big or small it is, right? And so when you compare the two sectors, once again, what are we seeing? Seeing the highest levels ever. Some of you might be familiar with this chart. It's known around the street as the best fundamental analyst on Wall Street. Not that it's a high bar, it's a pretty low bar, but nevertheless, still this one known as the best fundamental analyst on Wall Street, suggesting stock market is not going down, actually going up.
So I do hear what you're saying. Although I do wonder, an index is simply the sum of its holdings, right? So I do wonder if it also just so happens to be the case that a bunch of the companies in the staples index just happen to kind of suck right now. Like the businesses suck. Like Kraft Heinz sucks. Target sucks. What else do I have on my list? Kenvue. They had all sorts of issues right now, right? You have all these unhealthy junk food companies. J.M. Smucker sucks, right? General Mills sucks. So maybe it's also just a case of a bunch of these businesses that happen to be in this index kind of just suck right now. No?
I guess. I mean, I don't know anything about the businesses. Like, I don't pretend to know. I certainly don't pretend to care either. Yeah. I'm more interested in the prices of the stocks. Walmart looks good. There are
Constellation Brands sucks. No one drinks anymore. It's just a lot of the companies in that in the staples sector are just predisposed to sucking right now. And maybe that is a statement on where we are in the economic cycle, like kind of what you're saying, or maybe it's just that they all just kind of suck. Right?
Hershey's looks pretty good.
All right, all of them don't suck. A lot of them suck is my point, right?
Shout out Pennsylvania.
Yeah, Hershey's okay.
So I've never been to Hershey, but it's probably, I don't know how far it is from me, a couple hours maybe. I can go to the arena where Wilt dropped 100. You could go there.
I've been to Hershey Park and Hershey, Pennsylvania. It's a great place.
Did you go to where Dr. J dropped 100?
Wilt? No.
That's rude.
Yeah. I didn't know I can go.
Oh, did I say Dr. J? Sorry. Wilt Chamberlain?
Yeah, that's all right. I mean, no one drinks, no one smokes. Snack food habits are changing. You get all these.
Yeah, but then they're all smoking weed, and those are healthcare stocks,
which is the worst sector of the year.
Right.
So, yeah, that's true. I just think like maybe it's a case of both. Like you're saying this is a positioning thing, and I'm saying it's maybe positioning plus a little bit of fundies, right? And just the companies, they just kind of suck. Not all of them. I mean, Costco's good, Walmart's good, right? Coke, is good, but a lot of these companies, it's not a very big index. JC, how many companies are in this index? Like 70? Like it's
Probably something like that. Yeah,
not it's not that big.
I mean, it's pretty standard. Yeah,
no, less than 70, probably like 50. How many?
there's enough. No,
There's
that's
enough.
probably about right. Your guess is pretty good.
Yeah.
Here, throw up slide 6, the new slide 6 there, please, guys. For me, it's the positioning. You nailed it, Spencer. We've been hanging out too long.
Well, that's what you're saying.
The words that are coming out of your mouth are making me very happy.
Yeah.
Look at the Russell 2000 futures positioning. They increased their shorts last week, right? So the Russell 2000 closed at the highest levels ever. Speculators, these are hedge funds, asset managers. They're increasing their short positions as the Russell 2000 is breaking out to new all-time highs. I mean, that is really something. Is this because these companies are bad? I think everybody knows these companies suck, right?
I don't know. Couldn't this just be like? Couldn't this just be hedging? I mean, I feel like you're overthinking this.
Hedging?
Yeah.
Are you one of those people who think hedge funds hedge? Are you one of those?
Don't they?
No. Dude, the best was Tepper the other day. He was being interviewed by, I don't know, Alexis Glick or one of those. And she's like, oh, you're a hedge fund, so you hedge. And he's like, you want to know? He put his head down, he started laughing. He's like, you want to know my hedges? My hedges, I don't care.
Well, when you're David Tepper, you can not care.
Dude, and then Alexis Glick was just like, what? So funny.
So this is non-commercial futures positions as a percentage of open interest in the Russell 2000 futures.
Yeah, this is the positioning in the futures market. You got your smart money, your dumb money. This is your dumb money, and your dumb money has never been more short. Right?
I don't know enough about the futures market to say, but like, isn't it simply just possible that like a lot of this is market makers or whomever having to take the other side?
No. They are the other side of this is the NASDAQ 100 futures, which they are super long, right? So the trade that they have on, the speculators, the dumbest money, the worst investors of all time.
Credit to them, man. I mean, that has worked.
Investors of all time, ever.
That has worked for 16 years now. So
what hasn't worked for 16 years?
What it has worked, I'm saying.
I don't know about that. I'm talking about right now, bro. Right here, right now. So
can you blame them? Can you blame them?
I love that they're late to the party. I love that they're mispositioned. I wouldn't be making as much money if it wasn't for these guys. Are you kidding me? I'm super happy that they're there. If they weren't there, we wouldn't be making so much money. So thank you. So nobody's hating. I'm just pointing to the audience, right? You guys are in the chat. You're wondering what this crazy Cuban, why is he yelling at me about these futures? Let me just tell you very simply. There are all kinds of investors in the world that have existed for many years and will exist forever. Some of those investors are good at what they do. Some of those investors are bad at what they do. And there's everything in between. When you go down the list of the worst investors on earth, the asset managers and the hedge funds are that. They are the worst investors of all time. They have the greatest track record of doing the opposite of what you should be doing, particularly at extremes, which this qualifies. What are said terrible investors doing right now with their money? They are betting that the Russell 2000 small caps are going to go down. But you see, what actually is happening is that the Russell 2000 futures are going up. And not only are they going up, they're going up faster than everything else. So if you are short, the only way to unwind that position is to buy it back. And the higher the prices of the Russell 2000 small caps go, the higher the price they have to buy it back, which means they're losing money. If you know anything about the asset management industry, the goal is not to lose money. The goal is to make money. So as this line goes up, they're getting smoked. They have to cover anybody who is long a stock of futures. If you own something, you're promising to be a future seller one day. But if you're short, you are a guaranteed future buyer. The more shorts, the more guaranteed future buyer. And
Look,
there has never been more of those right now.
JC, a relative chart of the IWM and the Qs shows the Qs are still in a long-term uptrend against the IWM. You get these brief periods of about a month where the IWM will outperform. And this has been going on for a decade now. And that we just had that. It happened in August, right? IWM outperformed the Qs. Great job. That was almost a month ago now, right? So
Spencer, it is we are entering October, are we not?
Yeah, soon.
Okay.
Next week.
So we're entering October. That is the 10th month of the year, right?
Okay.
The Russell 2000 small caps stopped underperforming the NASDAQ 100 in April. That was 6 months ago.
The Russell 2000 stopped underperforming
the Qs.
The Qs in April.
Yes, sir. And so,
I mean,
in order for a line to start to go up, it needs to stop going down first. That happened 6 months ago.
Did it? The IWM QQQ chart bottomed like August 1st or August 10th.
Are you really questioning me when it comes to data?
I'm staring at it. I'm looking at it right now.
Spencer.
What am I looking at then? What am I looking at?
Spencer.
What am I looking at?
Small caps stopped underperforming in April. As a matter of fact,
I'm looking
April
at the ETFs. You're looking at the indexes. That's probably where we differ.
I mean, you can look at the indexes, you can look at the ETFs, you can look at the futures markets. Look at them all. The underperformance stopped in April. Now, to your point, it's not like we've seen this dramatic outperformance, right? However, I believe we are in the early stages of perhaps a dramatic period of outperformance and a mean reversion. And you are more than
I don't know,
able to bet that the worst investors of all time are going to be right. You can make that bet. Please knock yourself out. I, however, am going to make the bet, or I've been making the bet, that the worst investors ever are going to be wrong again. That's it. It's not that complicated. That's it. Can we bring in Kenny, hear what he has to think?
Sure. Kenny, what do you got for us? You got anything good? Let's find out.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Oh, Mr. Kenny Glick, sir.
What's up?
Big man with a little cup.
Oh,
Kenny, is this
Were you
market
picking
dull?
up with that one?
there you go.
Kenny,
It's actually a regular size cup. It just looks small.
are we in a dull market?
A what market?
Dull.
D-U-L-L, dull.
We had 2 dull days. That was it.
Okay.
And the funny thing is, everybody was writing about it, how it was dull. I don't think they were actually watching the market. Leading up to the Fed, they were like, oh, we expect there to be some nothingness going on. Meanwhile, there was an extravaganza. I think we had like 2 hours that were dull. And then the volatility that was supposed to ensue after the Fed meeting, that didn't happen either. We just go up. So nothing's changed.
But what was good is that all of the charts were being sent around before the Fed about how every time the Fed, right, the stock goes down, right? Stocks go down. And so, of course, when those get circled around right before the Fed, you can bet that that's going to happen again? No. It's not that easy.
We talked about seasonality on the schmooze with Hirsch. And again, if you fight through the seasonal weakness, it just means more bullishness to come, which is exactly what's probably going to happen.
I learned it from him.
Yeah,
the
rug pullers.
You guys think that I invented this. This is all Jeff Hirsch 101. You know, when they're ignoring the seasonal trends, that's the signal.
JC, are you a trend fighter all of a sudden? You're just fighting trends left and right?
Who, me?
No, JC.
Oh, no.
No. Rule number 1, don't fight trends. Rule number 2, if you're going to fight the trend, you better have a really good reason. And rule number 3, if you're going to fight the trend, you better have very well-defined risk parameters and know where you're wrong. Otherwise, don't do it.
Okay. Yep. Shorting is short-lived, and you know the rest.
What's on the move this morning, Kenny?
Well, I'm actually just right back to the same 5 stocks. It's basically open RGTI and the Qs, which since Wednesday has been the go-to trade. So RGTI, if you know, RGTX is a lot better. Open, whole shit ton of fun of trading that thing, up and down. Got crushed yesterday, so I bought some this morning. And the Qs, they just never go down. So these zero data options, if you're not familiar with them, get familiar with them, because you've got the QQQ, which basically you're talking about 90% of the time it goes up. And then when it starts on a Monday down, seriously, did anybody think the market was going to go down yesterday? It needed to start up and then give up a gap. When they started low, there was nowhere else to go but up. And once we broke 600 on the Qs, the program goes 600, get you 602.50. So now above 602.50, you got to think we're going 605, 607.50 today. But, people keep saying, well, why do you think the market's going to keep going up? So I asked, why do you think it's going to go down?
Right.
Why do you think it's going to go down? There's zero reason.
Because gravity. Because
the only answer is because it's gone up so much. Has it?
Yep.
Has it? Why?
Well, there's this guy on television. His name is Jim Cramer. And Jim Cramer was tweeting yesterday, and he says, this is Jim Cramer. So he says, I would like to see a pause in the endless rally of speculation, gold, crypto, and profitless companies, is what this guy Jim Cramer said. And I was just curious. I said, because he's like a TV anchor or guy, right? So I say, Jim, out of curiosity, what is the reason that you'd like to see that? Like, why would like a TV host want gold and crypto and speculation of profitless companies pause? Like, I didn't understand that.
Well, I know what I want. I like volatility because I get to actually short stocks. I remember when shorting was a viable way to make money as a trader. Not anymore. And I miss it. I do. I like being able to make money when most people don't know shorting or they're afraid of shorting. It's a lot of fun when there's actually a chance to make money with it. But now it's impossible. So it's long only. And right now that kind of worries me. But hey, it is what it is.
Well, aren't you the one who's always saying that shorting is short-lived and you're going to die?
And you're going to die. And if you want to run silver to 100 more, the more I just got some more in the mail last night. So let's go. I keep buying it and it keeps going up. So that's good.
Kenny, talk to me about this open.
Yeah.
And then now he's on to another one, right?
Yeah. Kenny, actually, I was going to ask you about that too. So Open Door. Okay. So obviously kind of a meme stock down yesterday. You're long overnight. Correct me if I'm wrong. This is, very anecdotal type question, but it seems like to me that in a stock like Open Door, you're buying, like, if it has a huge run up and then a big down day, you can pretty much always hold it long overnight and make money as long as you're out by like 9:31, right, the next day.
Oh, I'm not overnight. No, I came in just now. Faux show, bro, VWAP break. I only take the trade that works every time.
Fine.
Yeah.
I'm just saying it seems like even when you get these huge crashes in these meme stocks, overnight they don't crash. Overnight they actually go up.
Yeah, no? Well, it depends. I mean, it depends on where the aftermarket action was. A lot of times if you're ripping in the aftermarket, you'll gap the next day. But, this one got slammed, so the lows were in from last night. But to your point, yeah, sometimes it'll get.
Yeah, I guess it is a case-by-case basis. But anyway, so JC, here's how I'm going to know that the party is coming to an end. When you stop seeing huge reactions to somewhat silly headlines. So you mentioned that Eric Jackson has another one. Eric Jackson tweeted yesterday, he is long Better Home and Finance, BETR. It is up 29% today.
Slide two. Throw it up.
Slide two. Or now it's up 30%. When he does that and the stock doesn't move, that's how you know we are nearing the end. But until that happens, until you stop seeing 10, 20, 30% reactions to the upside because of a tweet or of somebody announces a Bitcoin credit card, they're up 20% today, right? When you stop seeing those moves, then you'll know. That's my take.
Okay. I don't think we're going to stop seeing these moves. I'm not because since like I said, since COVID, day trading's back. I mean, this is the good old days, and the good old days now has it gotten better and better and better. So there's 3 or 4 stocks every day that I've never heard of, and they just keep resurrecting themselves. I don't know where they come from.
What are you thinking? How are you looking at this better, Kenny, as somebody who does exactly this, and I do not? This thing's up another 30% today after new multi-year highs yesterday. This is the next, right? This is the next one.
Right.
I mean, this is a big move. Are you looking to fade this? Are you looking to ride that?
Normally I'll fade it, it's something like a Newegg, when I just waited. Newegg went from 3 to 130. You just wait for the blow off top. It's the opposite of the faux show bro. So, I mean, you say it perfectly. It's easier to buy stocks when they're going up and sell them when they're going down. Just wait for them to go down, because inevitably when they crash, they all do. Even the good ones, like a BMNR, which seems to have stabilized. It ripped and then it crashed and then it stabilized and made made back. But BETR, yeah, I mean, I've seen this one going around, but here, is this today? This is this morning?
BETR.
Yeah, I mean, the easy short was yesterday on the VWAP break right there. I mean, you dropped 30 points. So same kind of thing. You need an overextended move to get, start taking the opposite side. But that would have been where the short, again, and that would have been almost a 10-point risk. But, talking about a $30 stock that was up 300%, you got your 50% haircut. But yeah, I mean, there's one of these every single day. That's the thing. There's 3 now, nowadays. The thing is, and the reason this is better than ever before, better than the 90s, this is more of it. We had a select group of stocks back in the 90s to trade. Now we've got hundreds, if not thousands, of different ones, and they're all ripping. And it's just because I was just rebuilding. My computer blew up. I had to rebuild. I got an internet problem. I got a guy coming today. Anyway, but I've been rebuilding my watch list, and I've been rebuilding my platforms. And there was just so many stocks that I'm like, holy crap! Remember these? And you don't even hear of them. Like, there's so much going on.
Well,
and then
Kenny, I have one I was going to ask you about. I was going to ask you, can you bring up ASTS, please?
Yeah.
Is that above the VWAP?
It is right now. Yeah, had a nice move. Again, late day moves are really good for the next day. You had a really nice surge into the end of the day. So, continuing this one, another one. Just stuck in the mud, but it's a nice stock to trade, going around and around.
It won't die.
Yeah, I'm a big fan of the, this RGTI that broke out. This thing's got to be going into the 30s. I can't imagine not going to 30 today. And once it goes into the 30s, that's when it gets started. So, somebody was saying, hey, why are you so bullish the stock? And I was like, because it just broke out after basically a year-long consolidation. This has not been a parabolic move. Now you're going to get a parabolic move, because 30 gets you 50, 50 gets you 80. And if you don't think the stock's going to 120, what market are you watching? You got to start assuming every stock when they break out is just going to double. I know that sounds irresponsible, but that's the market we're in. And until it changes, that's what we're going to do. Like SOUN, right? Everybody remembers that one.
Yeah.
It died for quite some time, but now she's back. She's back, and she up 100% already. Where's it going to go now? Another 100%, because that's what we're doing right now. So let's go.
Kenny, so you like the Rigetti. What about Kingsoft? This is the Rigetti of China.
Not so good today.
The Rigetti of China.
It's the Rigetti of China. You didn't know that?
No. What's the symbol?
KC.
KC, like the Chiefs.
Oh, I don't even know this one.
Now you know. Well, this apparently is the Chinese rigatoni
out of the Andy Dufresne. There's an example. I've traded so many stocks. I must have traded it, because if there's a red line, that was my entry. So there you go. I was buying.
What happened to Never China?
Wow, I didn't even know.
He doesn't even know. See, he doesn't know.
Yeah,
it's incredible how many stocks there are. And it's incredible how many new ones, and these treasury stocks and the Bitcoin, the Solar. Every day there's something else. You guys know about Nucky? This one keeps coming back. Weird.
No, but I know about a Bitcoin credit card that's happening. FLD.
And I've been trading the uranium stocks. DNN's been pretty good. Just loaded up on this thing.
Wow, the fact that thing still exists. DNN.
UUUU and DNN. Old school, baby. Look at this move. This is all-time highs on UUU. It's not just uranium, it's rare earth. Come on, let's go. USAR ready to rip. Come on. I mean, there's so many good names to buy. That's why it's virtually impossible to be bearish.
Kenny, you're so versatile. You go from quantum to uranium. I mean, you were just all over the map. If it's moving, right? And
I'll go even deeper. I love coal. Who's into BTU? BTU finally coming out of the doldrums here. BTU, Peabody Energy. Come on, let's go. Let's talk about Transocean now. Let's go, baby. We're going crazy.
I love it. I love it when Kenny turns into a boomer. You know what I mean? Like this is good.
Come on, how about some Pitney Bowes? PBI's coming back. Look
Wow,
at this. Pitney Bowes.
It's like I don't even know you. It's like I don't even know you. I love it. I love all of
the stocks I watch. I mean, I watch them all, but it's insane. Pitney Bowes making it. Look at this comeback. Pitney Bowes, people. We're bringing back the mail sorting machines. Let's go.
Kenny, I got one for you. Nordic American Tankers.
Oh
NAT.
My God, yes. What was that symbol?
NAT. Nat.
Oh, right. Nat. Right.
And then hold on.
Wait, you know what we need to bring back?
What was the
dry ships?
Yeah, dry ships.
What happened to dry ships?
Remember that? It was a bulk index, right?
Yeah.
Right.
Death Spiral.
What's the Limp Bizkit, the Nookie ticker?
NUKK. Yeah, this thing keeps coming back. We trade this almost every other day. And also, you know what stock I love? 1250 Bull, BULL keeps finding love at 1250. One of these days it might break out. Listen, Robinhood stunk for 3 years and down in the Andy Dufresne. And when that came out, obviously you've seen what it's become. But I don't think Bull's going to be the same type of thing. But, again, down at 1250, this thing keeps getting bought. A lot of opportunity, obviously. Yeah. And earnings season's right around the corner. It's just the greatest market I've ever seen in my life, by far.
Let's not forget.
Wow, greatest market you've ever seen. You've seen a few markets, Kenny.
I have. Yeah.
I mean, I'd like this because you're more experienced now and you know how to handle it, or you actually think it's the greatest?
I definitely think it's the greatest because the vastness of opportunity. There's something for everybody. Small stocks, big, mid, price wise, every sector, and again, everybody's a winner right now. It's hard to be long and wrong. So I would not get in the way of some of these names. And listen, when doubling your money is the norm, what's to complain about, right?
Doubling your money is the norm. That's the benchmark.
It is. It really is pretty freaking wild. And now they got these triple leverage stocks, these RGTXs. I mean, seriously, RGTI goes green yesterday. It pops 40 cents. The stock pops $7. You buy 200 shares, the thing pops $7. You're up $1,400 in minutes. This is what's bad. What's bad about this? It really is incredible.
There are people that are very upset about it. Very, very upset. They think, I mean, you got Jim Cramer going out there talking about how he wants the speculation to stop, and like people like, what are you talking about, bro?
Yeah.
It'll stop eventually. Yeah. All right. Thanks, Kenny.
Glick.
All right.
You're the man, Kenny. Be good.
All right.
Kenny is, Kenny can adapt, right? It's interesting that he's not looking for mean reversion today at all. I would have expected some sort of mean reversion. He's just like, I'm not fighting this. No, thanks. I'm not fighting this. I respect that.
Kenny's been saying that this is the best environment for most, if not all, of this calendar year. And he hasn't really stopped beating that drum.
I just don't know if I believe that. I think he's saying that because it's the best market for him. He's doing very good. But how do you best market?
Of course.
Like I could say that too. Probably Strazza also. Like we're all having like our best years like ever. Like, so does that make it the best year ever? Or are we just doing it? Are we just playing it right? Like,
I don't know. I think there's also like there's degrees of fun. There's performance return, and then there's like return on like fun, right? And
you think this is fun?
I think he's having fun.
Right. Like, isn't he always having fun though?
Yeah, but again, it's all relative, right? I'm having fun, right? I mean, we're all kind of having fun. Maybe you're not having as much fun now as you were a few months ago, but I'm still having fun. So, and then as Kenny mentioned, we're like 2 weeks out from earnings season, so.
I have fun in bear markets too. But bull markets are definitely more fun. I've always said that. It's not that you can't make money in bear markets. It's just that bull markets definitely are more fun. More parties, more open bars, better food. It is what it is. Somebody in the chat was talking about how the speculators, the dumbest money on the planet, nailed it in 2022. They couldn't have been more wrong in 2022. Throw up it one more time. I just want to circle back. Slide 9 there. In 2022, the market had already bottomed by June of 22, and going into August and September, they had their biggest net short positions. They got destroyed, like literally carted off on stretchers. They absolutely got smoked. And then when that decline really started at the beginning of 22, they were almost net long. So they couldn't have sucked more during that period. And so you are, welcome to bet that the worst investors of all time are going to be right this time. You welcome to take that bet.
In April of 2023, we were at a conference in New York, full of a bunch of CMTs, and JC asked the room, "How many of you are bullish for the rest of the year?" And like 5 people raised their hands. And how many of you are bearish? And 95 people raised their hands. And JC was like, "All right, great. I'm going to tell you why you're all wrong." And that's pretty much what happened.
Yeah. It's just better to weigh the evidence, and actually go with the data than it is to just, try to pretend to be smarter than everybody else. Like, that just seems too hard.
It was awfully, maybe for you, but for the rest of us normies, it was awfully hard to be bullish in April 2023, coming off of the most brutal year, maybe one of the worst years ever, right? The worst year ever for stocks and bonds combined. So
yeah, but most stocks were up during the back half of 22, which most people didn't bother to look.
You're right. Certainly, I didn't bother to look.
As somebody who does bother to look, both for fun and for work, right? I'd be looking anyway, even if nobody paid me.
but it was also just about, like, it wasn't just the fact that the market went down. It was all these high beta speculative growth stocks that they didn't just go down. They went down like 70, 80, 90%. And a lot of them haven't recovered. Some have, but a lot of them haven't. So.
And now they want another sellout. They want another bear market. You just had 2 bear markets over the
last
2 years. Now they want another one.
We're just getting started in names like Zoom. We're just getting off the mat here. So,
dude, like, I don't understand. Like, people, like, go back, you people. Yeah. I'm talking about you people.
Yeah.
Go back and go study bear markets throughout history, and go not only study what they look like, but also study the frequency of them, so you can get a good idea as to how often they should occur. You just got 2 of them. 3, arguably. I mean, if you really want to go there, you could. I wouldn't argue that, but some people are arguing that you had a 3rd one. But that's
what? When? When?
Spring.
April? That little thing in April?
I am not saying that was a bear market, but I am saying that sentiment did reset, which is
yeah, for like a week.
Huh?
For like a week.
No,
a couple weeks.
Individual investors were more bears than bulls 14 consecutive weeks, the longest stretch of all time.
All right. It felt like a week. All right.
Well, it was 3 months.
Fair enough. Shit, what was I about to say? Something about I don't know. I lost it. Never mind. Hey JC, since we're talking about small caps earlier in the show, do you want to tee up the video that you did yesterday with Ari?
When are we dropping that? When does that drop?
It was dropped overnight. So
yeah. Excuse me.
Yeah.
Excuse me.
Excuse me.
Look at this team. So, we're talking about small caps, and we're in a meeting and going back and forth, sharing ideas internally. And it's like, let's talk to some of our friends in the business. Talk to them about if they're seeing the same thing we're seeing in small caps, because nobody is talking about small caps. Nobody. Spencer just dropped the link. Me and Ari Wald, Chief Market Strategist at Oppenheimer, Managing Director Extraordinaire, Mr. Ari Wald, friend of the show, friend of ours. To me, one of the best technicians on the planet today. I don't really care what most people think about anything. I don't have time to worry about their problems. There are very few people in the world whose opinions I care about. This one, my friends, is one of them. Mr. Ari Wald, one of the best in the business. My man. And he brought it. So nobody, and I mean nobody, is talking about small caps. Not in the media, not in Wall Street, not in different financial publishers. Nobody. So maybe we're crazy. Maybe.
I saw a couple of things this weekend, especially with the Russell at new highs. I wouldn't say nobody.
Well, so I call Ari Walt, and I'm like, Ari, what's up? So, he likes the industrials. He likes small cap industrials. That's what he likes. They have been a leader. Small cap industrials have been making new all-time highs. They were making new all-time highs last year. Momentum was making new all-time highs last year. Small cap momentum. So there have been areas within small caps that have been working very, very well. It's just that the index, the Russell 2000, has a lot of regional banks, has a lot of biotechs. So you're getting a lot of exposure there. But when you look at individual areas like tech and industrials within small caps, they really stand out. I would throw in consumer discretionaries in there as well. He didn't necessarily talk about that yesterday, but that's consumer discretionary small caps looking pretty good.
All right. So anyway, nice little half-hour video to complement your morning walk or whatever while you do your dishes. JC just couldn't wait. He was like, I got to talk to Ari. I got to do it right now. I couldn't even wait for the morning show. So it's up on the channel. And I have a feeling we'll be doing more small cap stuff later on this week. So stay tuned.
Oh yeah.
But yeah, it's small cap season. So Brian says Tom Lee is talking small caps. So there you go. See, people are talking small caps.
Respectfully, Tom Lee talks a lot.
Tom Lee's
talking a lot.
So do you. So
fair.
Yeah.
Fair. Dude, Tom Lee's the man. He's cool. I like
him. Can we get him on the show? I don't know him. You do.
Yeah. You know, there's only 2 Korean men that I trust in New York City with giving me recommendations for
Sam Rowe and Tom Lee. Yeah.
Sam Rowe and Tom Lee. Yeah. They know. They'll tell you. I'm telling you, you got to use your friends for like the intimate knowledge that they have about things that you don't know about.
All right, true story. We're in a meeting yesterday, and someone says, "JC, why am I even doing all this stuff on Twitter? What is the point? Why are you doing it, JC? Why are you even posting all this stuff on Twitter?" And you know what JC's answer was? It wasn't to promote himself. It wasn't to promote other people. You know what he said? He said, restaurant recommendations. That was his answer. Right? Yeah. Why do you engage people on Twitter? So I can get restaurant recommendations.
Yeah. They're like, JC, what? Because, there's I have 180,000 followers or something on Twitter. Some of them might even be humans, right? I don't know.
Yeah.
But
some of them.
What is the best? People are like, oh, JC, that's why the business is so successful, because JC's Twitter following. It's like, no. I wish that was the case. I'd have a lot more money. No, it is not that. What is the good part about having a lot of Twitter followers is that when you need shit, when you're just in a bind and you got to ask people who you trust, because you know what happens? Because there's some rando somewhere and that has never reached out, has never had anything said to me, but has been reading and, finding value from our work for many years. And then they're like, finally, I can help JC with my area of expertise in Michigan Greek restaurants, right? For example. So they're very excited to actually help out and be like, JC, I got the spot for you, blah, 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 blah. Dude, I'm telling you right now, I have used that in countries all over the world, and not just tickets, like sporting event tickets, also not just, things that you need when you're in places that you're helpless, right? Twitter comes through in the clutch. Just saying.
Yeah. All right, Phil, I think we'll be hopping on in a second. So before he does that, just a quick rundown of things. Looking at top movers of the day. We mentioned Better Home and Finance. That was a Eric Jackson tweet. He's long, so it's going to be up. It's up 40% this morning now. Dear Lord. Okay. FLD up 25%. They announced a Bitcoin credit card with Stripe and Visa. So that's a 25% gainer this morning. You got our old friend Kosova Sciences, which is it's $100 million company now. It's fallen. It's up 13% this morning. Plug Power up 11%. I think they had was it earnings? No, they're having a what was it? Yeah, they had some headline about hydrogen production guidance. So 11% gainer there. On the downside, nothing really jumps out. Firefly, FLY, that's his first earnings report since the IPO, down 11% on that. Lithium stocks down this morning. A lot of China I'm seeing down. But that's really it. Kind of a quiet day on the downside. All the fun is on the upside.
almost like a bull market.
Yeah,
Almost.
I mean, yeah, kind of, right? I'm just, there was one more. What is this FTEL? What is that? It is a very, very small company. Oh, digital asset treasury. Cool. All right. Another one. Every day, there's another one. Every single day, there's another crypto treasury company. And when the day comes, when a company announces they're adding some whatever crypto to their treasury and the stock does not go up, then you'll know. Party over. But until that day, we keep buying. That's pretty much it. As far as, I mean, there's other news, but as far as movers go, that's pretty much it. Watching the Kenview this morning, which, the weird thing to me about this Kenview thing, there was the press conference yesterday from the president about Tylenol and you shouldn't take it if you're pregnant. That headline, that was out 3 weeks ago, right? They said, or there was a report that they were going to say that 3 weeks ago. The stock dropped on that. And then again, it dropped again yesterday on the actual press conference. So if everything news is priced in, it's not, okay? Because that news wasn't even new news. You can see, look at the chart. It happened earlier this month, and it happened again yesterday. Same headline. So news is never priced in. That's the lesson there. What else? Somebody mentioned that we have Micron tonight. That's correct. We had AutoZone this morning. KB Holmes later on in the week. Costco reports on Thursday. That interests me as a shareholder. So we'll be watching that. That's kind of it on the news front. Not really much today.
Spencer, I like this little news rundown that you're doing.
Yeah, probably should. I mean, we used to do it. We kind of gone out of it, but we should do it more.
No, I like it because, it kind of keeps me posted as to what's going on. Because me, man, I'm not sitting there watching basic cable. Like, I don't know, random things about that are happening and stuff like that. I'm kind of just watching price action.
Right.
All right. So you want to play a game?
Yeah, but then we have Phil.
All right, perfect. Let's play a game.
Yep.
And why don't we bring in Phil to play a game?
Okay.
Phil, you want to play a game?
Yeah. 1 second.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Philly Pearls.
Good morning, guys.
Dude, I love your shirt. You love that shirt, don't you?
I do. This is my favorite one. It's just classic, simple. I love it. Like,
what does it say? Track and field or athletics team?
Also charts athletics.
Nice.
It's this is the classic shirt. You know what I mean?
It's been around for a minute.
I had an old one, and then I don't know what happened to it, and now I got this new one. I'm like, I'm excited about it.
A lot of people really like the swag, like the market cap. It was a cap, the market cap. Like that was a big hit. The Fibonacci is my homeboy.
1 second.
The Fibonacci,
I like the Fibonacci is my homeboy. I had that one. I gave it to my kid. He loves that. He's like a Fibonacci guy. He's a math guy. And then I got another one.
There it is, a market cap.
Yeah,
it's a market cap. I love it.
Very, very clever, guys.
Yeah, very clever. This is great. No, I mean, people want the swag. They want to buy it, but we don't. Should we just open up the store? In the chat, should we open up a store? Because we just have all these things just for fun, but we've never actually had a merch store. You guys think we do have a merch store?
We do, because
don't tell those people because they're gonna.
But yes, should we open up?
I heard about that actually. That's funny. Yeah. Heard about that. What's up, guys? Okay, let's play a game. Let's just play a game.
Okay, let's play a game. Ready?
Right.
Okay, slide 2.
Oh,
all right. Shit. Is this particular gentleman, Mr. Phil Perlman, a doctor of science, the doctor of the sciences, Dr. Phil Perlman here? Is this just trying to get some attention, or is it a valid point? So we got Peter Schiff here, world-renowned perma bear gold bug, coming out saying U.S. stocks. This is this morning. U.S. stocks are in a historic bear market that is far from over, priced in gold, quote unquote, real money. The Dow Jones is down over 24% so far in 2025, 33% since the end of 23, and 70% since 2000. The quote unquote bull market is merely an illusion created by inflation. Gold exposes that illusion. Is he onto something or just trying to get some attention?
He has a virus. He's ill, and it's a complexity virus. It's obsessive prediction disorder.
You don't think it's a marketing gimmick?
That's great.
No, I just think people are so. Reality is so simple. It's so straightforward. Here's a silver dollar. I drop it. It falls to the ground.
Oh.
It's gravity. The world is very simple. It's very funny that you asked me this question today because I've been thinking about this. The world is an unbelievably simple place. You drop a silver dollar, it falls to the ground. People try to avoid that simple reality by making things unbelievably stupid and complicated. That's what's happening here. This guy is making the world so complicated. I'm so smart. Look at my big ego. Look how brilliant. I'm going to just bend simple reality into this contorted stupidity so that I can avoid it, so that I can appear really smart. Who knows why? Who cares? Usually I think it's to avoid reality. That's my hunch. With most people, it's just they're trying to avoid reality, so they make simple reality very complicated and convoluted. They begin predicting things. They begin rationalizing things with all kinds of unrelated data points. It's an epidemic in our country, really. He's not alone. This is a prime example, but he's not. I mean, just go on the Twitter and people are predicting things left and right. Oh, we got this, we got that. And it's just, it's a comedy. It's an absurd comedy.
I don't know. I think it's a shtick. I once saw him jaywalking over on 44th Street between 5th and Madison, and he had 2 dime pieces on each arm, jaywalking down the street. I was like, all right, Peter Schiff, I see you, dog. I see you. I'm just calling it like I see you. I don't know. But let's check the data, Perlman. Slide 3 here, guys. Let's check the data. When we're looking at the relative performance of gold and stocks, as somebody who was a gold bug 20-something years ago, remember, Perlman, when you met me, I was a gold bug. I don't know if you remember that. I don't know if your memory is that good, but when we first met, I was deep in gold, but as it turns out, I was just being a trend follower. At the time, I thought I was a gold bug, but I was actually just a trend follower, as it turns out. Gold relative to the S&P 500, flat over the last decade. Right? Flat over the last decade. Zero outperformance from gold over the last decade. Real zero outperformance from gold over the last 5 years. And really nothing over the last 6 months. Kind of just, I don't know. It seems like stocks continue to be a place that's making a lot of us a lot of money, right?
Yeah, he's just,
we don't have to pretend the market's not going up.
He's just distorting reality to avoid it. That's what I think.
All right.
I'm not intimately familiar with all of his tweets, but I think this is probably a Mount Rushmore tweet of his. That is so good.
I think it's a game. I think it's a shtick, Perlman.
It might be a shtick. It might be both. It might be a combination.
Shtick is a Yiddish word. Do I have that right?
That's right.
Shtick is a Yiddish word.
Fucking love Yiddish words. And then so shtick comes from what?
Yiddish.
I don't know.
Shtick, it's refers to a performer's routine, a gimmick, or a characteristic behavior associated with a person. Yeah.
So it's probably from it was probably used in vaudeville. It was probably vaudevillian, like those guys.
Oh wow, that's next level for me, bro. I don't know what that is.
You don't even know what that is.
That was like the precursor to SNL, JC. That's what vaudeville was.
Got it.
Phil, any pearls of wisdom for us as some of us celebrate the new year?
Pearls of wisdom. Nice.
So here's the thing. So here's what JC did right there. Okay. All he did was put a chart up with a very simple reality, a relationship between 2 assets over a period of time that is just price and time, right? Relative price and time. And that is simple reality. So here's my pearls of wisdom. I'm noticing that people have lost their minds on both sides of the aisle. I'm spending less time on Twitter. I go on there because I think maybe I can help somebody. Maybe I can help somebody. I have friends there. It's very nice. And then I'm bombarded, people on both sides who are just have completely lost touch with reality. I have relatives completely lost. Right? Listen, here's my strong advice for people today and for always. Reality is very, very simple and straightforward. You drop a silver dollar, it falls to the ground. You pull up a price chart, price is what it is. It's the only thing that pays, as our brother Brian Shannon would say. Pay attention to reality. All of that other stuff that's going on outside, just ignore it like your life depends on it, because it does depend on it. Because the more you begin paying attention to these angry rants occurring that are all diluted on both sides of the aisle, all diluted, the further and further you drift from reality. And the further you drift from reality, the more painful your life will get over time, because you'll begin to disconnect from it. And that goes in the markets too. The further you get away from reality and you get into stories and you listen to people who have no idea what they're talking about and just making things up, you are taking risk that you don't even understand you're taking. So just pay attention to reality. Charts are a great place to start. Family's a great place to start. Nature's a great place to start.
Perlman, I think about something quite a bit. I don't know that I've ever spoken to you about it, but you know how I roll, and I kind of walk down a slippery slope of trying to avoid the noise while at the same time try to be tuned in for idea generation and to try to get a pulse for sentiment. I've always been fascinated by human behavior and the way that, particularly investors are making decisions, because I have found over many, many years, and the market continues to prove that to be true, which has just further, I weigh sentiment even heavier than I did perhaps a decade or 2 decades ago, because I've seen the power of it and I'm constantly looking for it. So, I wonder, am I the crazy one? Am I the one that's drifting too far from reality, going down into the dungeons of the Twitter spaces at, late at night to hear some ideas that I could fade? Like, am I doing it wrong? Or like, am I being creative as long as I'm aware that I'm surrounded by crazies, right? And I'm doing that with intent. Like in that case, it's okay, right? You know what I'm talking about? Like, I think about this.
Two things in response. Number one, trends exist. And you know that, and you are aware of it, and you have observed it with your own eyes repeatedly over time, to the point where it's in your blood and you've seen it. Number two, you also know that when by instinct, again, by experience, instinct, whatever you want to call it, when you see people fighting the tape, and the louder they get, the wronger they are. That is a secondary aspect of reality. That is part of this larger trend that you're seeing, is that emotional aspect. I mean, I'm seeing it like crazy, and we've been seeing it, and you've been pointing it out like crazy, and I've been seeing it. People are fighting the tape. People are so angry. People are talking about these, this is going to happen, impending doom, that ends before the trend ends. I mean, people capitulate. That's what capitulation is. We've seen this. I've seen this cycle play out multiple times. You know what? I was just thinking the other day about, and he's still around. There was this guy, Peter Evis, on this is before everybody's time. There was this guy, Peter Evis, on thestreet.com back in the late 90s. And he was, a get the pencil out and do the work valuation guy. And in around mid-1999, he started writing these bearish pieces about the NASDAQ, right? And he was the only one. Everybody else was on the train. And he was the only guy that got it right. He predicted it. He had it hook, line, and sinker. Everybody else was capitulating. Every single other person. March 2000 rolls around. Everybody else. And this guy is like, hey, listen, the NASDAQ's going to 1,000. And he was not angry. This is my point. He was just doing math. And maybe it would have been another year. Maybe he would have been wrong. Instead of wrong for 6 months, it could have been a year and a half. Who knows? But the guy was right, and he was doing the math. He was looking at numbers and just simply doing simple reality tests. He was the only guy. Everybody else. But there were other bears with him who were these angry bears who weren't just simple, plain math. And they all capitulated. They all got bullish. I remember, I don't want to beat on Kramer too much. He's really not a bad guy. The Weisenthal interview with him, by the way, is ridiculously good. But he came out like basically March 2000, leaders of the new school, leaders of the new world, or whatever that article was, just super bullish. And it was just like, that was the top, like that was the moment the roller coaster goes over. So, these people are just going, like, until they kill themselves or they completely capitulate or they just disappear. I think, this is just a trend. It's just going to follow what a trend does. You're just going to watch it as a trend. If the trend breaks down, you're going to be one of the first ones to tell us, and all the bulls are going to hate you. Seen this play out over and over. It's just simple reality.
Yeah, Perlman, what we always laugh about is during bull markets, I get called a perma bull, right? Notice how in bull markets, I'm never called a perma bear ever in bull markets. However, in the bear markets, they call me perma bear. I'm the perma bear in the bear. Never a perma bull during bear markets. It's so good. So, for me, I just found it easier. Instead of trying to be smarter than everybody else, which I know for a fact I am not, it's just so much easier to bet that humans are going to make poor choices. Like, that's the easier bet than it is to try to be smarter than everybody else. So, like, that's more my focus.
Yeah, you're just using observation, and you used it over and over again. It's not your first cycle. It's not your second cycle. It's not your third cycle. It's like your 20th cycle. And you just observe. What's that?
I'm getting old.
You're getting there, dude. You got 3 kids, bro. It's pattern recognition. And it's simple reality, and it's what is today. It's just dropping this quarter, falls to the ground every single time. That's never not worked. Every single time I've ever done that, I can do a live experiment on air. Gravity continues to hold.
Perlman, what is the best season of the year, and why is it the fall?
Fall's great. This moment right now is incredible. And it used to be that I used to like and dislike seasons. I've gotten a lot more sort of loving just the continuous change. So I even kind of dig winter, not quite as much as like a beautiful day like today, but winter's even beautiful in its own way. You know what I mean? And then, it preps you for May, April and May. Like, it gets you in that mood, like that first gorgeous day of May. And, everybody's out running around and everybody's so excited. You couldn't have that without the summer, wouldn't have it. So fall is great. Winter's really good. I can't believe I'm saying that, but we were planning to move south forever. We may never move south. We may just stay here, man, and just frolic in the snow, and just embrace that instead of get hardy. Too. It's also a hardiness thing. Like, you stay tough. You want to stay tough. The longer you stay tough, the longer you stay vital. You guys caught me in a mood today, and you asked me just the right question. Reality is all there is, guys. It's just simple, plain reality. 5 fingers. Duh. Drop the quarter. Duh. All that stuff, whatever the hell he was talking about, taking numbers from over here and over there. It's just maybe it's
a fugazi fugazi. It's a fugazi fugazi.
What's that?
It's a fugazi. It's a fugazi.
It's a fugazi.
That's right. All right, Phil, thanks a lot. Guys, we're going to wrap it up there. Once again, if you did not see JC's conversation with Ari Wald, it's up on YouTube. The link is in the chat right now, pinned to the top. Thank you, Phil. Thank you, Kenny. Thank you, chat, as always. We'll see you tomorrow. Guys. All right. Happy New Year to those who celebrate, and go make some money.
Run it.